a breakdown in price here. The S&P 500 back below the 6, back below 61, obviously, taking us to where we were about 5 sessions ago. So how does that weigh against putting in all-time highs last week?
Yeah, this is actually really good, Oliver, to look at the technical setup. I know it kind of looks a little bleak right now and you're down about 1.8%. But the reason why, if you kind of go to that daily chart, there's a couple of things that I'm trying to highlight here. One, there was 3 gaps to the upside that obviously now we came back and at least tried to test 2 of the 3 gaps. That's a really good thing. And then also look where we opened up this morning. We opened up basically right at that upper channel line that we were pretty much in right before we had that breakout, let's say back on the 16th or so, the 17th of September of January, and then we broke back to the upside. Now we're coming back and testing a prior area of resistance, now utilizing it as an area of support, which is good. We're also keeping and trying to manage that 20-period moving average and staying above that 50-period moving average. Once again, that's actually pretty good. So now how do we have actually some follow through here? And that's going to be a really big question. MACD trying to hinge a little bit lower there. Keep that on your radar. If you do actually see a bear cross, that probably is more of a fade signal in the near term. But for now, we're kind of holding the levels that we really need to hold. We want to kind of stay above, let's say 59.50. Really, you don't want to close below that. That's where you got to get back into that channel. And if we kind of break even lower, going below that 5800 level, 5780, we get a close below that. That's when we actually make lower lows once again, and that's actually very bearish. But for right now, the technical setup actually looks very textbook. You kind of had a breakout, you tested a previous area of resistance. Now we have a little bit of a pullback, utilizing an area of resistance now as an area of support, and now we're trying to bounce back off of it.
So, all right, here, we need to find support, basically. We need to try and get back into, ideally back into the 6s. But given that we made the higher high, it does kind of give us some flexibility here to explore kind of the ranges of what might be an up channel. I mean, it never is pleasant to get hit as hard as we are. But that's kind of the point of the technicals, is to describe where you're at on the playing field. And, we're not at risk of getting a safety right now. We were just scoring. We're just set back a little bit.
Yeah, definitely. Actually, let's pull up the E-mini S&P futures chart, because this is actually going to probably describe exactly what you're talking about. We had obviously a little bit of a breakdown, actually a pretty decent breakdown overnight, but look actually what happened overnight as well. This is the E-mini S&P 500 futures, okay? We had this breakdown to the downside. Once again, we had that channel. I have not changed this channel since we looked at this 2 weeks ago, Oliver. I kept this chart up. It actually bounced right off of that resistance point. Also, look at that recovery of the 50-period moving average in yellow. That's actually, once again, we're above that. That's something that we wanted to defend. That's overall bullish. And then I have this anchored volume weighted average price. I bring this up every once in a while. I usually put it on the lows. We've been defending the volume weighted average prices when we have these new lows kind of in the market, or these little pullbacks. We've been defending them for the last year and a half or so. We just defended that anchored VWAP sitting at the January 13th. So recovery of that anchored VWAP, recovery of the 50-day, you close above this level. You once again kind of flushed out a lot of the froth that's in the market here, and now you want to try to reclaim. And what you would want to reclaim either today or tomorrow for the mini S&P 500 is 60.70. That would be the key area. You do not want to close below 58.60. So even if you kind of look at this chart says, hey, there's some buyers that actually stepped in here. That's a pretty long wick. I mean, that's going to be a pretty decent hammer candle if we're able to close even at these levels right now, or even if we get more gains. And once again, defending a key area that was a resistance point now turning into support, defending the anchor VWAP, defending the 50-day moving average. This is healthy. Technically, this is really good. I wouldn't get too concerned about it for right now. Now, obviously, other news could hit the market. We have a lot of economic data that's in the market right now, but the VIX is also really not pricing this in. I mean, we had a 2% move to the downside for the mini S&P 500, and VIX is only sitting at around 21 or 22. That type of move would actually translate to around a 35 VIX. So we're kind of right on track when it comes to that seasonality. We had a very low VIX last week. We're starting to see it kind of ramp up here. Probably will continue to see it elevated, but we're not seeing a massive blowout in the VIX where the market's completely freaking out as of yet. And I think that's also a good sign. Once you start seeing the VIX starting to creep up to around 30, 32, that's when you know that we might have some a rocky road. But the market right now is, even though it's down, it's not freaking out yet.
Yeah, VIX kind of getting more, I guess, kind of in line maybe. Even without knowing anything about DeepSeek, 14.8 on VIX seemed kind of low, given some of already just the macro plates that are kind of grinding up against each other a little bit in somewhat of an uncomfortable way, whether it's stock valuations, if it's bonds related to inflation risk. I mean, there's stuff that's been percolating that cooled off pretty hard, obviously, in the last 2 weeks, but it was a fairly recent phenomenon for us to get down into 15 VIX. I think important for folks to remember that before basically that CPI 1-2 punch with Waller's super dovish tone, we were at VIX, basically where we are right now for more macro, I think, structurally risky reasons, which is kind of the point I was asking Jim. I'm curious your thoughts on this too, is so if it's not like buy vol, then kind of what is the approach? Because you've got a bunch of economic data ahead of us this week that could, in theory, create the exact opposite forces of what we're getting this morning. Because a lot of our economic data has been dollar positive, yield positive, bonds negative. And this morning, you're getting the opposite of that. So it kind of seems like a fun setup here, no matter what kind of trader you are.
Yeah, rotate to defensives. And that's exactly what's happening today. Consumer staples up 1.7% right now. Healthcare up 1.7% right now. Real estate up 0.5%. And if yields continue to move to the downside, those interest rate sensitive sectors, even utilities, if you can pick the right ones, right? Because right now the utility sector is a little bit odd, right? Yeah, but if you look at like a NextEra or Duke Energy, more of the traditional utility players,
great point.
Yields going down makes that a little bit more attractive. And I think this is still going to be a rotation story over the next couple of weeks. I don't think this is a buy it and just hold it for the next 3 months, 4 months. I think you got to get really tactical with the positioning here. And if you are a little bit concerned about vol, I mean, vol is kind of expensive right now, but if you do believe that we're going to have a bigger breakdown to the downside, you could buy some hedges there. But I think you have to just play the rotation, and also looking at the China stocks. That could be a thing where they're already oversold. Maybe you get a little bit of a bounce, put in a little bit of a counter trend trade out there, if you will. So that's kind of where we're at. This is not a sell everything rally right now. This is a rotational rally that's taking place, or a rotational sell off. Until you see everything in the green by more than 1%, I think we continue to trade this market in the right fashion. And what
I'm kind of surprised KWeb's not up more. I'm surprised KWeb's like unch right now. FXI, up 0.5%. I feel like to some extent that calls into question this narrative on its own. Like if this were such a massive game changer in favor of Chinese tech, like how come Chinese stocks are not doing squat? I mean, I get that like equities are all in the same basket in the asset class, and there's a lot of outperformance there today, obviously, but still, it's not making people go hand over fist for China stocks, which kind of curious.
They were earlier, Oliver, but they also, if you look overnight, China also had some really weak data. So their manufacturing PMI came back in contractionary territory, which was negative. Their composite PMI also came in lower than the street's expectations. So that was actually a little bit more of a fade. The hope was that the stimulus measures were going to kind of stick there, and it just doesn't look like it's going to. And now they're going into Lunar New Year. So we're not going to get a lot of economic data from China, but that's another reason why we saw that fade for a lot of those stocks overnight.